look and I'll show you exactly what some of these formations look like. So when we say that price is ranging, range bound, or consolidating, we mean that price is moving within a very clearly defined high and low. Very clearly defined high and low. And in between these periods of consolidation, we have what is known as price discovery. Between these areas of what we call balance, i.e., both buyers and sellers are agreeing that, listen, we can establish value within this price range. Between those periods, we have price discovery, whether to the upside or to the downside. And so Tesla, for the past, you can say 5 years, has been largely stuck in two areas of big or huge consolidation. From this level here at around 174 to 290, 285 thereabouts. So that's one zone of consolidation. And then we've had another zone of consolidation from around the 250 level to its former all-time highs, going back to 2017 of around 390. So we've ranged, or we've moved from highs to lows, from highs to lows, from highs to lows. We actually broke beneath the low temporarily here, and breaking back into the range actually was a trigger for many people to get long this stock at the end of last year and going into this year. So I chose this to kind of talk about tonight because it has been, of course, getting so much airplay, getting so much news time because of the tremendous increase in price that it has experienced from a low of around 177 in June of last year, making an all-time high in December of last year at 390, and now effectively tripling all the way to 968. We've had a bit of a pullback for the past couple of days. We'll go down to the short time frame so you guys can see that exactly. And then now we're settling here at just around 750. So one of the first things that you guys need to understand is that there are different market participants, and those different market participants have different agendas. They have different time frames, they have different investment objectives. So whenever you're looking to get into a trade, whenever you're looking to get into a particular security or stock, you need to ask yourself, first of all, what is your objective? What is your time frame? And then look at the chart of the security and ask, okay, on the time frame that I wish to operate with, what are market participants more often than not, what are they doing? Because at the end of the day, it is the rare retail trader that has the type of money to be able to move the market. It takes a lot of buying power, buying and selling power to be able to move the market out of balance to imbalance or from imbalance back into balance. And so effectively what you want to do is you want to identify where the current, where the wave is advancing in which direction, and then you want to simply surf that wave higher and or lower depending on your particular investment bias. And so on the monthly time frame, we have institutional operators or institutional market participants who are not necessarily concerned with fluctuations on a day-to-day basis, but when it comes to monthly and yearly levels, they are very interested because that's the time frame and the investment horizon with which they operate. And so Tesla, having made a low at its extremes, again, another principle. If you are looking for the greatest risk to reward benefit to skew the reward based on the risk you're willing to take, it is always my advice and it is always good, prudent investment strategy to enter at or near price extremes, both to the upside and to the downside. Again, depending on your investment bias in terms of the direction. So if you wanted to buy Tesla for a buy and a hold, a long term hold, then the time to have done so comfortably would have been when the odds were statistically heavily in your favor around this 170 to even 200 level. To be fair, the price did not remain at this level for very long. As you can see, each one of these bars, as I said before, is a monthly bar. And so effectively, price came down in 1 month. That was the month of May to this low at around 180. It made a new low in June and then popped all the way back up to highs at around 230. Your chance and opportunity, if you were not able to buy in June at or around the lows at around 180 to 200, you had 1, 2, 3, and for a short period of time, 4 months when Tesla effectively did very little in this area right here. Tesla did very little, 1, 2, 3, 4 months, that it began to form a base above this extreme low. That was an opportunity to, again, look to enter for a longer term hold using that low or leaning against the demand that might have been present at that low to manage your risk. And so, having appreciated now all the way to 968 and having come in a bit at 750, what is there to do with Tesla? Should you be buying Tesla at these levels? Again, the only answer to that question is consistent to your particular investment time frame, account size, investment objective, and risk tolerance. Because of how much short-term momentum Tesla has, it has and will attract lots and lots of short-term buyers and sellers. What that means is that you can find that not only will the ranges expand and have expanded, obviously, because it has tripled in less than 2 or 3 months, but these market participants are a lot more active, and hence price is not going to stabilize based on the actions of these intermediate and short-term participants. People who are day trading the stock, people are holding it for overnight and selling the next morning, um, simply playing the pattern of it gapping up several tens of points and even hundreds of points when it closes for the day. So once those short-term participants are in play and in fact, you're going to find that there's going to be loads and loads of price volatility. And so it becomes less of a comfortable hold if you are an active trader, if you are in a short-term time frame. If you are in a long-term hold, then I always advise in my own trading and to the people that I work with from time to time or longer term clients, you always need to be aware of levels, zones, and sentiment. Because as a prudent investor, you always want to sell into strength. Sell when the going is good. Make hay while the sun shines. And if you have been in Tesla anywhere from 250 to 300, or even if you bought the breakout at around 390, you should be trimming some of your position as the stock price goes up. So as it gets to 500, trim some. You have a near 120 point move in this 1 week alone. Now that we're on the weekly time frame, you trim some. You then have a 300 point move from 650 all the way to 950, you trim some, you trim as you go, because the security that you hold is in demand. So even if you believe that Tesla is going to 5,000, the prudent investment principle is that you sell some into strength. You can absolutely hold on to some in the anticipation that it can continue its, ascent. But as the world turns and there's nothing new under the sun, what goes up will eventually come down. Nothing goes up forever. So there's no need to ride Tesla all the way up after getting in within this consolidation in order to see it fall all the way back down before it it does whatever it needs to do next. There's no need for that. It is absolutely good practice to take some profits, lock it away, wire it out of your investment or brokerage account, be very happy with your performance, and enjoy the fruit of your wise investment decision and your labor. There's absolutely nothing wrong with that. So, I mean, what can you really do with Tesla at this point? Well, if you're an active trader, because of how volatile this is, it is actually might be on your radar for day trading, because there are levels that you can find within this mess. It's a very sloppy chart. You can find levels within this mess, the previous day's highs and lows, for example, with which to trade off of, but you must be exceptionally nimble and obey your stops. Obey your stops because, given the type of price action, how volatile it is, how uh, the extent of range expansion that we're seeing, you need to respect your stops, because if you don't, you can not only be burnt but continue being burnt. Just as people who may have shorted this breakout here at 400, okay, it got to 440. Oh no, it'll come back. It got to 510. Oh no, it'll come back. 650, you're not even looking at your trading account anymore. At 800, you're feeling sick. At 900, you're about to, do something dangerous to yourself and to your family, because you've blown up and you've lost so much money. When, if you had obey your stops, there were points in times within here, even if you wanted to get short, tactically, you could have taken tactical shorts, intraday shorts, and be making money on the way up, even as a short. So the key here is to not get blown up on price movements like this. Survive, live to survive, survive to live another day, survive to be able to use the knowledge and skill that you've acquired in the investment field to extract value from the market another day. There's no need to blow up over this. So that's kind of like my short view on Tesla. To be fair, it is a much better buy at this 500 level. Will it get there tomorrow? I don't expect it to. Can it get there in 3 months? Absolutely can get there in 3 months. Can it also build some value here between 800 and 700 before once again attempting to make new highs and possibly a tag of 1000 before it breaks above and continues to sell off? There are a number of scenarios that can happen here. The key is, do not get caught on the wrong side of it and stay caught. Don't stay wrong on the wrong side of it, because whilst many people are rejoicing for having made a lot of money speculating on this, on the other side of that, there are lots of people who have been absolutely wrecked, I'm sure, trying to short this, trying to fade momentum, and are stressed and hating life as a result of it right now. So don't let that person be you. This is my opinion on Tesla. Be safe out there, guys.